Okay, good evening everyone. Today we will be learning how to calculate interest on drawings in profit and loss appropriation. As we know, profit and loss appropriation is an account prepared by a partnership firm. Now, when a partnership firm prepare profit and loss appropriation account, the partnership firm definitely consider the partnership deed, and considering this date, this PL appropriation is prepared. Now, partners, partners in need, they may take out part of the profit or part of the capital as drawings. Or you can say the partners in their personal need, they withdraw money from the business, which is known as drawings. Now, these drawings are of two types. Drawings can be made out of capital or drawings can be made out of profit. Now, out of capital drawings means, suppose a partner A has contributed 2 lakh in a partnership firm on 1st April 2021. Now, after 3 months, A withdrew from business 50,000. 50,000 withdrawn from the business as on 30th June 2021. Then, when we will calculate interest on a capital, we will calculate, suppose the rate of interest is 10%. Then 2 lakh interest on capital on this 2 lakh will be provided for 3 months, that is April, May and June, and thereafter 50,000 is withdrawn from the business. So the capital balance reduced from 2 lakh to 1 lakh 50,000, and for 1 lakh 50,000 interest will be calculated for the next 9 months. I'm just showing you what's happening here: April, May, June, July, August, September, October, November, December, January, February and March. These are the 12 months. So in the month of April, the business had 2 lakhs, May 2 lakhs, June 2 lakhs. So first 3 months 2 lakh was used in the business. At the end of June, 50,000 was withdrawn by a partner, that is by A. I am assuming the name of the partner to be A. So thereafter the capital balance is reduced to 1,50,000. So for the next 9 months, the capital used in the business, that is 1,50,000. So while calculating interest on capital, 2 lakh into 10% into 3 by 12, because this 2 lakh was used for 3 months, and thereafter 1,50,000 into 10% into 9 by 12. So when we talk about interest on drawings, so if the drawings is out of capital, then interest on drawings is not calculated separately. Since it is out of capital, so while calculating interest on capital, we just simply deduct the drawings amount. As you can see here, 2 lakh, that is for 3 months. Thereafter the capital balance reduced to 1,50,000 and 1,50,000 was calculated for the next 9 months. So always remember, in profit and loss appropriation, when we talk about interest on drawings, then that is basically interest on drawings when the drawings is made out of profit. Because the accounting year doesn't end, and before that you take money from the business. So definitely the partners are supposed to pay a certain amount as interest to the firm. And this interest on drawings is to be given effect only when it is mentioned where in the partnership deed. And we should consider that rate of interest what is given in the partnership deed. Okay, now the issue is how we will calculate this interest on drawings when the drawings is out of profit. The very simple rule to calculate interest on drawings. If you keep in your mind this simple rule, any drawings, any type of drawings, any pattern of drawings by the partner, you can easily calculate. The thing is that you have to remember the date of drawing. That is the date when the partner is withdrawing the money. And one more point, the year ends, the date when the accounting year ends. These two dates. From the date of drawing to the accounting year end, interest will be calculated for this time period. One notable point here, of course, rate of interest has to be a per annum interest. Then only we will consider the time factor. I am assuming here the interest to be 5%. Okay, so if it is 5% per annum, then only time factor will be considered. Otherwise, if it is only 5%, no need to consider the time factor. Just simply the drawings amount will be multiplied by this percentage to get the interest amount. So in most cases, in most of the sums, you will see the rate is containing per annum. So definitely you have to consider the time factor. So while calculating interest, what you have to keep in your mind? The date of drawing and the year ends. The time period you have to count here, that for this is for how many months, and for that months you have to calculate the interest. I'm just taking an example. Suppose case 1, A withdrew. A is the partner. A withdrew rupees 10,000 from the business on 1st July 2021, and the accounting year ends on 31st March 2022. Then how we will calculate the interest? First you have to take the total drawings amount. How much? The drawings amount is 10,000. Then rate of interest, that is 5%. And then you have to see the time, that is the date of drawing is 1st July and the year ends on 31st March. So you have to count the time period from July to March. So July, August, September, October, November, December, January, February, March. So interest will be for 9 months. So simply to calculate interest, this simple rule you have to keep in your mind. You have to read the sums, you have to understand the date of drawing and the year ends. From the date of drawing to the year ends, the time you have to consider and interest to be calculated for that time period. As you see in this case, amount was withdrawn on 4th July and they are from 31st March. So it is for 9 months. So interest is calculated for 9 months. So you will get the amount here. Now, this is the simple way of calculating interest. And this formula can solve any type of drawings pattern. That means whatever be the way of drawings from the business, the simple method is sufficient, but sometimes it takes much time. In that case, we have to depend on some other methods, some shortcut ways to calculate the interest. Just I'm taking an example for better understanding. Suppose example 2, I'm taking A withdrew rupees 5,000 per month. 5,000 per month at the beginning of each month. At the beginning of each month. Now, if I detail this drawings pattern and if I consider April, May, June, July, August, September, October, November, December, January, February and March. These are the 12 months. And how the partner is withdrawing money from the business? Every month at the beginning, the partner is withdrawing 5,000. Okay, this way, at the beginning of every month, the partner is taking 5,000. Okay, this way, every month. Now, if we apply the simple rule here, on these drawings, the rate of interest, if I assume this to be 5%, then this drawings is for how many months? From April beginning to March, it's for 12 months. Okay, so 12 by 12. Then for the next drawings, the interest will be 11 by 12. Then for the next drawings, the interest will be 10 by 12. So this way, for each drawing, we have to calculate the amount. So ultimately, we will get the interest. But this is very much time consuming because you will find this type of sums for one mark question in CBSE and ISC. So calculating this situation, 5,000 per month at the beginning of each month. In this case, we take help of simple method, but it will be very much time consuming. Then the shortcut way is we can either apply product method or we can apply average method. So I will discuss today the average method of calculating interest in this specific cases. Not only in this specific cases, whenever you will find a certain amount is withdrawn from the business and between two drawings there are certain gap. Okay, then you can take help of this average method. So if you take the help of average method, then you can calculate the interest on drawings like this. Interest on drawings equals to interest on drawings. First you have to take the total drawings amount, total drawings into rate of interest, total drawings into rate of interest into 6.5 by 12. Now definitely the question coming to your mind, where from this 6.5 comes? The average method says, here the partner, see the first drawing is this one, this 5,000 is the first drawing. So average method says, count the month from the first drawing to the end of the year. So from the first drawing to the end of the year, the month is 12 months. And from the last of drawings, March 1 is the last drawings. So from March 1 to year ending 31st, it is 1 month. So let's average these two periods. So if you average these periods, it becomes 6.5. So if you ask me where from this 6.5 comes, then the explanation is this. Okay, what is the rule for calculating interest under average method? See the first drawing, from the first drawing to the year end, the time period, and from the last drawing to the year end, the time period. Average this. Okay, so rate of interest into 6.5 by 12. So total drawings 5,000 per month. So in 12 months, the total drawings is 60,000. That into 5% into 6.5 by 12. Whatever amount comes, that will be the interest on drawings. So there are certain cases, certain specific cases wherein you have to apply this average method. Okay, now you can memorize this. Okay, whenever the drawing is at the beginning, then it will be 6.5 by 12. To understand where from 6.5 comes, that explanation I have given. But every time the explanation need not to be explained, just you will remember, okay, if it is at the beginning of each month, you will apply 6.5. Now if at the instead of at the beginning, if it is at the end of each month, then the first drawings, is it on 1st April? No sir, this is on 30th April, and the last drawing on 31st March, because every time the partner has withdrawn the money at the end of the month. So from 30th April to 31st March, the time period left is 11 plus, and 31st March is the last drawing. From that day to year end, it's 0 days, because 31st March is your year ending date, and 31st March is also the date for last drawing. So the time left from the last drawing to the year end, it's 0. So if you get the average period becomes 5.5. So when the drawing, a certain amount is drawn at the end of each month, then you have to calculate interest on drawings like this. Interest on drawings equals to total drawings 5,000 into 12, 60,000 into rate of interest 5% into 5.5 by 12. So this way you have to calculate the average period. What is the rule for calculating the average period? From the date of first drawing to the year ending, and from the date of last drawing to the year ending. Average that period. Total that period and average divided by 2. You will get the average period. Let's change this 5,000 per quarter. Per quarter. At the beginning of each quarter. So we know that a year has 4 quarters. So April, May, June is the first quarter, as you can see. April, May, June is the first quarter. July, August, September, second quarter. October, November, December, third quarter. And Jan to March, fourth quarter. On 1st April, he withdrawn 5,000. Okay. Then again on 1st July, he withdrew 5,000. On 1st October, 5,000. And on 1st Jan, 5,000. So this is the drawing pattern at the beginning of each quarter. So now to calculate interest on drawings, what we will do? First we will take the total drawings, 5,000 each quarter, so 4 quarters are there. So 5,000 into 4, 20,000 is the total drawings into rate of interest 5% into the time period. The time period, as we know, in case of average period, from the first date of drawing to the last date, that is 12 months. And the last drawing is 5,000. As you can see, there are 4 drawings. The last drawing is 5,000. So it was drawn on January 1. So from January 1 to March 31st, it is 3 months. So get the average, it's being 7.5 months. So here it will be 7.5 by 12. So this way, at the beginning of each month, at the end of each month, at the beginning of each quarter, at the end of which quarter. So wherever the drawings pattern is, a certain amount at a certain gap, you can always take help of average method. Or else in simple method, you can calculate other situation, that is other type of drawings pattern. Okay, now you have to practice sums from the books, then this part will be very much easy for you. Thank you.